What if I told you there's a trading strategy with an 87% win rate, but traders still lose money using it? And even worse, at one point it dropped over $1,400. So the real question is this actually a good strategy or just a slow way to blow your account? Let's break it down. In this video, I'm going to show you a full backtest of an SPX 0DTE Iron Condor strategy. Real numbers, real risk, no hype. And by the end, you'll understand exactly why the win rate looks amazing, where the real danger is, and whether this is something you should even trade. So here's how the strategy works. Simple. Each trade, you risk about $370 to make around $100 to $130. So you're risking more to make less. Already sounds weird, right? And if you're new, this probably doesn't even make sense. Why would anyone risk more to make less? The answer is simple: probability. This strategy is designed to win often, not win big, and that's a completely different mindset. Most beginners want big wins, fast money, but professionals think differently. They're okay making small amounts as long as they can do it consistently. And this is where most people misunderstand the strategy. They see the 87% win rate and think it's safe, but they don't realize you're collecting small profits while taking bigger risk. It's like picking up small coins while occasionally taking a bigger hit. And if you don't respect that risk, one bad day can erase a lot of progress. Let's look at the results. Over 156 trading days, this strategy made around $6,700. Out of those, 136 were winning days. Only 20 were losing days. So yeah, on paper this looks amazing. But let me ask you something. If I told you you'll win most days, but sometimes lose big, would you still take this strategy? Most people say yes, until they actually experience it, because it feels very different in real life compared to looking at a backtest. High win rate, consistent profits. But here's the problem. Win rate alone doesn't tell you the full story. Let's break down the real game here. You're making about $100, but risking $370. That means one loss can wipe out 3 winning trades. So even if you win most of the time, those losses hit hard. And this is exactly where beginners get fooled. They focus on how often they win instead of how much they lose when they're wrong. This is one of the biggest mistakes in trading. A strategy can win 90% of the time and still lose money because a few bad losses can destroy all those small wins. That's why smart traders ask, not how often do I win, but what happens when I lose? Let's make this even simpler. Imagine this. You win 3 trades in a row, you feel good, confident, then one loss happens, and suddenly you're back to where you started. That's how this strategy works. Progress, then pullback. Progress, then pullback. And if you're not mentally ready for that, you'll quit at the worst time. Now let's talk about the most important part: drawdown. At one point, this strategy was down about $1,460. And this is where reality hits. Because imagine this: you've been winning, everything feels good. Then suddenly, loss. Another loss. Now your confidence drops. You start thinking, maybe this strategy stopped working. So what do most traders do? They skip the next trade. And guess what happens? That trade wins. Now they feel even worse. So they jump back in, usually at the wrong time. This cycle is what actually destroys accounts, not the strategy itself. Now your account is dropping fast. This is where most traders panic. They stop the strategy, or worse, they start changing things randomly. And here's the part nobody talks about. It's not just about numbers, it's about how you react. Because when you're down $1,000 plus, you don't feel logical anymore. You start doubting everything, and that's where consistency breaks. The strategy didn't fail, the execution did. Now here's something positive. The profit factor is around 1.97. That means for every $1 lost, the strategy makes almost $2 back. So yes, there is a real edge here. This isn't random. But having an edge is one thing. Using it properly is another. This is why rules matter. You can't just take this strategy and trade it randomly. You need consistency in entry position size risk, otherwise, you're not trading the system anymore. You're just gambling again. Because even with a good system, if you skip trades, change your size, or act emotionally, you can still lose money. Now, here's something interesting. Not all days perform the same. Most profits come from Monday, Thursday, Friday, while Tuesday and Wednesday are usually slower or unpredictable. And this actually makes sense. Midweek, there's more uncertainty, nay, more news, more randomness. So timing matters more than people think. Good traders don't force trades every day. They adapt to conditions, and this is where experience comes in. Because the market doesn't behave the same every day, some days are clean, some days are messy, and the better you get, the more you start recognizing those patterns. That's what separates beginners from professionals. If you look at the equity curve, it's not explosive, it doesn't shoot up. Instead, it slowly climbs, with small pullbacks along the way. This is what real trading looks like. Not big wins, but steady progress. Now think about this. What's worse, losing quickly or losing slowly? Because this strategy, if used incorrectly, won't blow your account in one day. It'll slowly drain it, and that's more dangerous. Because you don't notice it immediately. That's why understanding the risk is more important than the reward. And I'll be honest, this kind of growth is boring. There's no excitement, no big wins to screenshot, just slow, consistent progress. And most people can't stick with that. They get impatient, they switch strategies, and they never see results. So here's the truth. This strategy is not exciting. You're not going to double your account overnight. It's boring. Small wins, again and again, with occasional bigger losses. But that's the game. Consistency over time, not chasing big wins. So the real question is this strategy worth it? It depends on how you trade it, because if you try to use it emotionally, it will fail. But if you treat it like a system, with rules, risk control, and patience, it becomes completely different. And this is exactly what we do inside our Discord. We don't just talk about setups, we track them in real time. Every SPX 0DTE setup, entry levels, strike selection, and risk are shared as they happen. So you're not guessing, you're seeing the decision process live. This isn't signals, it's structure. So you understand why a trade is taken, not just when to take it. If you want to see real trades using this exact strategy in live market conditions, you can join our Discord. Link is in the description, and I'll see you inside.